let's see how this goes. Trying. I am live. I'm not live. Trying. So let's test for a delay. One, two, three, go. let me know if anyone opens this up, if they can hear anything. If they can hear what's going on. Yes, okay. All right. This is a little weird since I've still got about a 10-second delay, so I'm not sure where exactly that's coming from, or that's just something I'm going to have to live with. So I won't be able to hear myself or monitor myself, so I'll just assume it's still working until it's not. Yeah, I wanted to answer your question, Scotty, mostly about because I said I thought we were going up, but then I took a short right off open. But this is about time frame trading, right? Like, in the bigger picture, let me get a longer time frame chart. So this is what, a daily chart of NQ, and I can, we're still in an uptrend, right? Until we're not, right? So. Yes, I've been a little bit, I wouldn't say bearish. I mean, I'm a little skeptical of this massive move continuing for longer, but on the daily chart, it seems to still want to go up, and they're still buying key tech stocks right now. So, I can't get overly bullish because it's really easy to get hundreds of points behind in NQ on a swing trade. So I don't want to do that yet. I'm not loving the long side because I think this can end at any time. But if I change time frames, well, I mean, not that I trade a 3-minute chart all the time, but, this is today. So we open, and what NQ will often do is it'll peak into open as program trades, banks, etc., buy on open quite often, and when they're finished buying the initial few minutes, we drop, and I like to take that as a fade trade quite often. We hit our 34.75 projected. We actually went one tick below it, and that was our bottom of the day. So that was a potential long entry. But I've had my hands full with a bunch of other trades and some tech issues today. So I kind of avoided a long, not because I'm anti-long. I just I caught a nice short today and made some money, and I wasn't really feeling it. Things look kind of weaker in here anyway, so I just figured I'd wait. Am I looking to reshort? Maybe, but probably not until we get somewhere up into this, closer to the overnight pop high, that Sunday night opening high, which would be, actually R1 here, 56.59.50. So I like that, just shy of the overnight high. Hopefully we can move up there this afternoon, and it might set up another short. I don't know. Cumulative delta on ES, which is the bottom frame here of this internals chart I have set up on Sierra, is climbing. So I have a version of an intraday version of the McClellan is moving up, and obviously advanced decline on NYSE bottomed and is moving up. I can show you all this on DTP as well, but we'll see what kind of strength we get. But just there's a difference between day trading and swing trading or larger time frame trading. When you're trading, you have to pick your time frames. And I do want to note something, because I've had a lot of questions on from users, from subscribers, about my trading and the way I'm trading and all that. I did not start Datatraderpro with the intention of being a trade calling service. My intention really was to share some of the internals and methods that I have found to be helpful to my trading. And what I have found, the only thing that I have found that works for me in trading, is to learn how to read the market. And not everyone wants to go through all the work that sometimes entails. And instead, they simply want to be told where to go long, where to go short, where to put their stops. And that's really a trade calling service. I've had a lot of people ask me to share some of my trades, so I've been doing that. But, the other side of that, the other edge of that sword is that it's been confusing to some people because I've been day trading, NQ mostly, and not even trading SPY or QQQ, which I generally don't trade. But I think the message I want to get across here is like I'm trading very small time frames right now. Sometimes I take longer swing trades and things like that, but I think, as you've seen for the last little while, since we had a burst up on the election, we've spent, I would say, 90% of our time in the markets just grinding sideways. And I like day trading, and I like to make money that way, with maximizing profits and minimizing risk on short-term trades and trying to make some money every day. I mean, we haven't always got it perfectly. The market, has been whippy, and there's an element of chaos all the time. But as you've seen and followed my trades, you can see that I've made money out of this, what I consider quite a difficult market. So it doesn't mean that every trade is going to be right, and it doesn't mean that you necessarily want to trade those time frames either. So you're going to have to decide how you want to use the site and how it fits in with your trading. And I'll be honest with you, the site can fit in with a number of different trading styles. It's not, I've had people say, well, I think I'm gonna leave the site because I'm not day trading NQ. Well, really, you've missed the point. If that's what you're thinking, you've completely missed the point. I'm just showing you some of my trades because some people have asked me to share them. But that, I'm afraid that that's partially painting things into a corner where people think that that's the only way to trade. We've got block trades on bonds and on different sectors like the dollar and emerging markets, and we've got GDX, and we've got all this stuff. But I'm just showing you what I'm doing and sharing with you what I'm doing. I'm looking at block trade levels for support and resistance on the indexes, and I'm trading intraday off of that because I feel like, even though we've come up quite a ways, and we may still have a ways to go yet, I'm more comfortable taking small risk in this market because there's some things underlying this market that I don't trust. I think we are severely underpricing risk in the market with a VIX under 10 and all kinds of potential stuff on the table politically, that, and that's just my read on it. I mean, it doesn't mean that that's the absolute truth. It's just my read on it, that I feel comfortable day trading because I can maximize profits while minimizing risk, making money in a difficult time in the market, and that's what I'm comfortable with right now. It certainly doesn't mean that that's what you have to do. I'm trying to show people a lot of different things in the market, and sometimes those things will contradict each other. A great example is today, where we have volatility down and breadth down. I can show you that very easily here. We've got, breadth negative on NYSE. It's come off the lows, but certainly, it's been negative for much of the day. We had a little burst higher off open. But the Russell, the NASDAQ combined, and NYSE all are in the same picture. However, we've got volatility on lows of the day. So VIX is down about 9%. And VXST has come well off. So the only thing up in volatility space is VVIX, which has been up about a little over 2% today, has now come off as well. So these things contradict each other. The negative breadth and negative volatility doesn't happen all the time. I would say, I'm being sarcastic, it's very rare. It's as rare as hen's teeth. But what does that picture give you? That just tells us that we don't have a clear picture in the market. And on the trend page, We've been slightly negative, not massively negative, but slightly negative all day, but at really low numbers. So we've got a neutral range day reading. We've got negative MCC, our version of the intraday McClellan. We've got negative dollar weighted buying pressure. So net money flows, they're not buying stocks on a net basis here as far as our readings go. And yes, we include all the big high flyers like Apple, Google, Amazon, etc. in this reading. So certainly Apple prices come up today, but there isn't a lot of follow through from other high flying tech stocks today. So it just means we're in a spot where we're consolidating, or we're grinding sideways in the markets, even though we are near a high. You can have a high level consolidation. It just means when these readings contradict each other somewhat, that you don't have to trade. It may not be, I like to trade clear setups. Otherwise, I'm taking very, very small moves. So small intraday, trying to trade the intraday extremes. And an intraday extreme would have been going long at 56.34.75 or thereabouts, because that was a touch of the overnight low. It was a touch of support, and certainly shorting, the 48 to 52 area has also been a potential trade today. But what I wouldn't do is short 44, because you're right in the middle of the range. I would wait to see, if you're going to get a little higher, and that's just an NQ example because that's just what I'm trading. Anyway, I'm blathering on, folks. I hope you're still listening. Can someone type in that I have not been talking to myself this whole time? I hope. I don't know. I can't listen to myself with a 10-second delay. Thanks, Scotty. There's about a 10-second delay, so I can't listen to myself. If it was almost like just a very slight echo, I could put up with it. But I have no way of knowing whether I'm still recording. So hopefully that makes sense to you guys. There's a difference between analysis and trading, and sometimes that difference is very small, meaning you're doing your analysis on a daily time frame chart and you're trading a daily time frame chart. I'm not doing that. I'm trying to keep a higher level analysis in play of where we are in the markets, but I'm trading my own account with my own money, whatever way I see fit that I can make some money during the day, because these markets are notoriously whippy. They're going to turn on a dime, and it's my job as a trader to, I trade for a living, so I need to make money, every week and every month, but I prefer to do that by taking wins every day. So you're going to see times where I say, I'm bullish on a larger time frame, but I'm shorting on it during the day, or I'm shorting the open. Those seem to contradict each other, but you see that days like today it worked out, right? So when you have a sense that you made a fairly strong high overnight and you're going to pull back at least to retest support before trying higher, that was my feeling today. So, and that's where we roughly turned out. So anyway, those are my deep thoughts from Jack Handy today. So if anyone has any questions, I'd be happy to answer them. I'm afraid today's deep thoughts were still in the shallow end of the swimming pool, Scotty. So we're not that deep today. And that's it. I'll stay here for a while because it looks like we're just kind of parked here for a little bit. What is the cloud? That's just it's one form of the Ichimoku cloud that I have on NinjaTrader, and you'll see that from the chart, we've been support, we've been resistance, we've been support, we've been resistance, all in the same area. We're basically, this is a pretty short time frame chart. These are 15-minute charts, so if I change that time frame, what does it look like on a 60-minute chart? It's pretty much just support, right? Little pokes below it have been bought up, and when we pull back into it today twice, we've hit support. So there we is. Ichimoku Cloud. I'm a little more new to Ichimoku. I've used all these other indicators for many years now, or a number of years now, so I'm pretty familiar with them. As you see, all my indicators are support and resistance based, rather than trying to predict future moves from moves that happened 30 bars ago, right? Like, it's not a criticism of any of those. Some of them work well they work really well in trending markets. I mean, moving average based indicators, which include MACD and the moving EMAs and all that kind of stuff, they work much better in trending markets. Even things like RSI. RSI is a reversal indicator, but if you're not in an extreme, if you're somewhere in the middle, it's very hard to gain any useful information from that. So I tend to look for what happens in block trades and what happens in order flow, immediate order flow on the futures, at points where I think it's going to turn. Market's going to turn, and I can show you a little bit more about how I do that using order flow. Let me grab this guy. I mean, this is one of the charts we use, but when you get it to an intraday low, or where you think an intraday low is going to be, I mean, this is a complicated chart to read. I mean, you really need to learn some order flow to use this, but basically, we've gotten some absorption in this bar. This is our daily low, right, or intraday low. So basically we got some absorption, and we got a buy side imbalance on the low, and then we got a series of buy imbalances here that confirmed that as a low, and and basically that level is held on back tests. So we'll see. I think we're going to have to hold this 90 level. Remember on ES last couple of weeks that as the market has moved up, we've hit resistance at 88.75 and 90.75 3, 4, 5, 6 times. I don't even know how many times. I have to look back. Many times in the last week or so. So it's normal that when we break above a resistance, that will again become support. So I was looking for ES to bottom into somewhere around 90.75 today, and I think our bottom split the difference between, it was 89.75. So it actually split the difference between those two resistance levels, prior resistance levels that is now acting like support. And so I mentioned 88.75 and 90.75, and go back on something like a 15-minute chart and look back on ES how many times that was resistance in the last week or two. And then you'll see that once you break above resistance, it then usually becomes support, and we split the difference with it on our low of day today. So that is our region within a point or so, either way, give or take. That is our support now. So any back tests of that should hold that level. If they don't, well, then that changes the picture. Then we've broken support, broken high level support, not absolute support, but high level support. And then we'll have to revisit where we think, where the blocks look like they are, etc. The block picture is kind of interesting. Here we are on SPY. All right, so SPY has come back and hit the late prints at 239.73. So I've got this thesis. This is the same area that we sold from on Friday. So overnight, the futures popped up and came back, and we went back down, and we've back tested this. So actually, this is a potentially bearish picture. Now, we've got a line, 239.70 to 73, roughly. you can draw across there, and so far that has acted as resistance. So we've got a little bit of a confusing picture here. We've got support holding on ES, and we've got resistance holding on SPY. What are we going to do? Well, I would suggest don't do anything. Just wait. We're going to see whether an afternoon rally, if they can muster enough steam, will break us above here. And if they do, great. Then we're in agreement. If not, well, I think the size of the institutional money behind this is going to trump whatever is happening in ES. Okay? So, we've got millions and millions of prints here at these levels, and today's a relatively low volume day on ES. And most people, you have to remember about the futures, and especially something like ES. A lot of people who are trading ES get really low day trading margins. And if you look at the open interest in the futures, not in the options, but in the ES futures, they're only about 2.8, 2.9 million in open interest. Now, lately we've been trading really small. We've been trading under 1 million. But what's more normal is trading well over 1 million and actually close to 2 million in a day. And so if you think that you're trading about 50 to 60, half to 2/3 of the entire open interest of a contract in a day, every single day, then really it's a day trading contract. It's more than it is a swing trading or position trading contract. So I think people are taking longer swings and position trading SPY, and certainly there's a lot more institutional interest in SPY than ES. And ES is the day trading crackhead version of what to trade the S&P 500, for lack of a better word. I mean, basically half of the volume is turning, half of the open interest is turning over every single day. So people are not holding ES is my message. They're trading it. Trading moves, trading 2 points, trading 10 points, whatever it is, and then they're getting out. So I wouldn't, when they're in disagreement, it's my personal feeling that SPX and SPY, being the instruments that are traded institutionally, trump most small wiggles or moves or breaks above resistance and things like that in ES. So I would say SPY would win the tiebreaker most of the time. SPY and SPX, if that helps at all too. QQQ's had quite a lot of volume on Friday's closing levels or thereabouts as well. So we're just, what was this, 137.53? What are we at now? 137. So we're very slightly above there. But and whether this is a late, I guess this is a late print from back here. Yeah, something like that. So, we're roughly at these levels anyway. IWM's under its 139.11, 138.99. So, I'd say 139 and slightly higher is your resistance. We're below that. Dow, these may be some sells from some earlier buys. We'll see. I don't know. Dow, you can't. DIA doesn't move the market. It's quite low volume, and gets only block trades once in a while. So we're waiting, we're watching, we're waiting for something to happen, and the market still seems to want to be bullish, even though internals are slightly negative. Volatility is well down. Participants in the market don't see a lot of risk on the table right now, especially with the French election gone. So they may try to rally out of any kind of high-level consolidations, and we'll just wait for that. We'll just, personally, that's how I'm playing it. I'm just waiting. I'm spending a lot of time waiting in this market, but and you got to take your shot when it's there. You got to take, if you're scalping or whether you're really long-term trading. I mean, if you're really long-term trading, investing more than trading. I mean, we had a buyable dip when I last announced that sort of mid-April low. We had, down in the 2320 area on ES, I announced that was a buy area. And usually what happens when things don't look great in the market at that time, I'll get a bunch of people questioning the call, or I'll get a bunch of people doubting it. I'll get a bunch of people saying, well, they don't see it right now, and then suddenly we burst higher. So the market's still bullish where dips are going to be bought, but they're not going to necessarily make it easy to buy, right? So another thing I should point out, we're really right around these levels now. This is our daily ES chart, is that our prior all-time high was here. Now, that was back in March, and that was on a different contract in ES, right? So what happened was we had a really a three-wave move down, so very corrective, and then we're working on the fifth wave up. 1, 2, 3, 4, 5 waves up. So I expect that we're probably not going to go much higher. Well, if we go higher, we're probably not going to go much higher than 2420, 2430, which would be sort of the right kind of measured move off of this, right? Because this is a very flat, what a fourth wave consolidation looks like, right? So we've had that, we've popped higher, we're retracing. We may get another move higher, but I don't think we're going straight up another 100 points, is what I'm saying. I think we're going to be finishing off a move somewhere between here and 2420-ish. I mean, the 38.2 extensions up at 2432.75 roughly. We could hit that, but I don't think. I think that's pretty extended. And ES certainly isn't acting like it's. They're not, we didn't have a bullish trend day today, for example. We had a pop higher French election, so it's a bit of a sell the news event. But I've got a Darvis box indicator here, and sort of our prior highs were, I guess this was the prior all-time high here at 98. So it's in the same vicinity. We poked above that today, but we're slightly below it now. So this may be a bit of resistance. Our prior all-time high, a poke above and come back below. It might be a little bit of resistance, but we'll have to see. Certainly back over 2400 and just let it go. Follow it. On the daily, I'm using this double stochastic as a bit of a cycle indicator, like a timing indicator. It's getting kind of toppy, but this is a very slow lagging indicator, right? Like we bottomed a few days before it bottomed. So you're not always going to get an exact call, but just note that it's getting into the toppy area of a cycle. So there's a few things pointing to, yes, we can easily go higher. I don't think we're going to go massively higher, although another 20 points higher from here would feel like a huge bullish breakout above prior all-time highs to a lot of people, and that would get a lot of people bullish just in time for a rug pull, which is what the market tends to like to do, get everybody positioned on the wrong side and then reverse hard. So you got to be careful about that. Okay, so that's Deep Thoughts version 2.0. And that's about it. That's what I got for today. So I'm just gonna watch what we're doing. See, we popped up on NQ. We pulled back, and we've got a tail here that looks like we're buying. And this little green line, I don't know if you can see, was our high of day and then our close on NQ. On Friday, and we seem to be using that as some kind of that's been resistance today, down, back up, a bit of resistance, back up, and now could be support. And if it is support, we're going to go to 59.50 to 61.50 is my call for end of day. And if you want to take a line or take a long against these lines, then you can have quite tight risk here, and it might be a good 10-point move up, and I'm considering doing that right now. Metals, yeah. tough. Very tough to call. Let's look at the blocks together on metals. Let me get that up. Let me just get up a chart. Metals have had some block trades for sure in the last few days. And it looks to me like somebody's accumulating. Look at SLV. Well, it's not a massive print, but we've got some prints. It's not often, unless you're going to get a really strong move down from here, that you see this kind of pattern of like, look at the same size, 264, 142, 264, 146, 264, 142. It looks like it's the same buyer, right? Like just slowly accumulating a position in here. Now it drops a bit more, they buy another tranche. So it was probably their intention the whole time with these smaller chunks to start accumulating a position in this area. That is my feeling on SLV. On gold, it was a very similar picture. I think somebody's been accumulating rather than selling. I don't, we have a million print, which is quite large, 500K, another 500 and change K. We may get another drop, but I think that drop will quickly be bought up and we'll be back above these levels shortly. That's just on block trades. I see what I recognize from past behavior as being the pattern of accumulation. But it doesn't mean you have to, if you don't have a strong stomach, don't trade metals, period. Because they can be very whippy and you can get a great looking setup during the day that overnight gets completely taken out. Same thing with oil. The metals and oil, all the major commodities are traded round the clock. They're traded heavily in Europe and Asia and all those banks and all those traders. It's not just a U.S. mainly focused market like ES and NQ. Although you get some international traders in ES, it's really a small percentage. So just like we don't, mostly trade DAX or mostly trade FTSE or whatever, they tend to stick to stocks and indexes they know. But gold is worldwide, oil is worldwide. So you can be buying up what looks like support, and if you don't have a strong stomach, you can take a big drawdown overnight that feels very uncomfortable, and then you get up wrestled out of positions, and then we end up going the way we thought we'd go anyway. On a larger, let me get a GLD chart. For some reason, I think this was having issues updating data. Let me see. I'm going to change instruments on this to 60 minute. Yeah, what have we got now? Data series. I'm not getting enough days on this. Let's get 30 days. Apply. Okay. All right. I like, we've got a 1, 2, 3, 4. We may get one more low, but I think this is a monthly Murray math. So, 1218 is our monthly reverse area, and we got within like $2.50 of that on the spike last night. So I think, we're kind of building a bottom here. We hit and pierce through monthly S2 support. This is a monthly indicators on this chart. So monthly S2 is pretty significant, right? So we hit the top of trading range here on the Murray math and went down from there. So and our monthly pivot reverse was within, what was it, 1280. Yeah, it was within under $2 of that high. I think we went, we had another higher high. Yeah, we did. We had a higher high. Oh, so that was back then. It hit our monthly pivot reverse. It's changed now, okay? But look how it topped into the monthly pivot reverse. Beautiful. All right. So we're getting close to the opposite end of that, 1218.70, I would say. If gold goes much below, then bail. Don't marry it. Trade it, don't date it. You know, I'm looking for, this move to me off of monthly S2 support is up, potentially, the start of a move to 1246, which would just be, you could call this a dead cat bounce, because that would be a bounce from S2 to S1. It's still well below the pivot, monthly pivot, right? So, but I think 1246 to 1250 area would be my initial target for a bounce here, which would be a very nice trade, allowing for another touch of S2 and maybe one more low into this 1218.7 or 0.8 area. Okay, but I think, I'm talking my book a little bit here because I'm long metals. I've been scaling in a little bit since this area, but really, really small. And I didn't even touch silver until it was lower. So I started silver longs on Friday, and they're just holding. So we'll see what happens. And I started them via some options. So silver July calls. So I got 1650 strike silver SI July calls, and they're not priced ridiculously high now, in my view, because metals have been down for weeks now. We've had, I think, something like 15 or 16 straight down days on silver. It's in bounce zone, in my view, just on timing, on indicators, on support levels, on larger time frames, etc. So it's just the way I view markets, right? I'm not the be all end all of traders. I do not purport to be a guru. I am just a trader who's learned a lot on his own over a number of years. So, for me, I'm seeing what I like, at least for a good bounce in metals. So, okay, hope that helps. ES has definitely had a lower high off of the bounce off the low than NQ has. NQ looks a little more bullish than ES right now. ES is just barely hovering above its pivot, so we're just gonna have to wait and see how this plays out. I need some tea, so I think I'm gonna cut this off for now, but I hope this was helpful. I've got this set up. I can probably do these anytime if you guys have questions, or if we come to a juncture in the market where things are a little confusing, and we can try and wrestle some kind of consensus or understanding that way together. Okay? All right. So I'll see you guys shortly, and let me know if you need anything. All right. Bye.